You're not broke because you don't earn enough. That truth stings a little, doesn't it? Pause for a second and be honest with yourself. How many times has money passed through your hands this year without leaving any real evidence behind? Rent paid, food eaten, small pleasures enjoyed, yet somehow the future still feels expensive and far away. If that sounds familiar, stay with me. And while you're listening, drop a comment with the habit you know is secretly hurting you. You don't need to explain, just name it. Number 1 sneaks in quietly and feels responsible, almost mature. You get paid, and the first thing you do is handle everyone else's needs. Bills, subscriptions, family obligations, social plans. What's left, if anything, becomes savings. Most months that, if anything, is the loudest part. The problem is simple and brutal. When you pay yourself last, you teach your money that you are optional. People who build wealth flip this script. The moment income arrives, a portion disappears into savings before life gets a chance to touch it. Even 10% makes a difference. The U.S. Federal Reserve reports that nearly 40% of adults can't cover a $400 emergency without borrowing. Paying yourself first is how you stop being part of that statistic. Treat your savings like a bill that must be paid. No excuses, no negotiations. The next habit feels normal because almost everyone does it. Debt has been dressed up as a lifestyle tool. Buy now, worry later. Swipe, cap, split payments. The average credit card interest rate sits above 20% in many countries. That means if your money earns 8% in an investment, but your debt charges you 22%, you are running uphill with weights tied to your legs. Bad debt isn't just numbers, it's stress with a monthly due date. A simple rule saves people from years of regret. If you can't buy it in cash today, you can't afford it yet. Credit cards don't reward loyalty, they reward mistakes. Then there's the missing safety net. Life is polite until it isn't. Cars break, jobs disappear, health issues arrive uninvited. Without a buffer, every small crisis becomes a financial emergency. Research from the CFP board suggests that households with at least 3 to 6 months of expenses saved experience significantly lower financial stress and make better long-term decisions. This buffer is not an investment, it's peace of mind. It allows you to say no to bad opportunities and yes to better ones. Build it slowly if you must, but build it deliberately. Another silent habit is not knowing your own numbers. Many people can tell you the price of their phone, but not their monthly spending. Money leaks thrive in darkness. Lifestyle inflation feeds on promotions and pay raises, convincing you that every increase deserves an upgrade. Bigger house, new car, nicer everything. Without tracking income and expenses, you don't control your money, you react to it. Wealthy individuals don't guess. They know their assets, liabilities, and direction. Seeing your finances written down is uncomfortable at first, but discomfort is often the doorway to change. Let's talk about spending that wears the costume of happiness. Expensive hobbies aren't evil, but unchecked, they become anchors. Shopping is therapy. Dining out is routine. Upgrades justified as I deserve it. Enjoyment matters, but so does proportion. When hobbies consume future security, they stop being fun. Ask yourself a tough question. Is this expense adding value to my life or just noise to my week? The answer reveals more than any budget ever will. Many people believe saving alone will make them wealthy. It won't. There is a ceiling to how much you can cut, but no ceiling to how much you can earn. Studies from the OECD consistently show that income growth, paired with disciplined saving, accelerates wealth far faster than frugality alone. Cashback apps and coupons help, but they won't change your life. Skills will. Side income will. Negotiating pay will. If saving feels exhausting, it's because you're only working one side of the equation. Taxes are the biggest expense most people never question. Over a lifetime, taxes often surpass housing costs, yet many never learn the rules. Wealth isn't just about earning more, it's about keeping more legally. Tax-advantaged accounts, business deductions, and investment shelters exist because governments want certain behaviors. According to the IRS and HMRC, individuals who use tax-advantaged investment accounts can increase long-term returns by tens of thousands over decades. Understanding taxes doesn't make you greedy, It makes you informed. And if you care deeply about giving back, reducing taxes legally gives you the power to decide where that money actually goes. Another common trap is waiting for the right time to invest. The right time feels safe, obvious, and perfectly timed. It rarely arrives. History tells a clearer story. Data from Fidelity shows that even investors who entered the market just before major crashes often outperformed those who waited on the sidelines, simply because time in the market beats timing the market. Inflation quietly erodes idle cash every year. A diversified approach, balancing safer assets with growth opportunities, allows money to work while you sleep. Waiting costs more than mistakes ever will. There's also the habit of indifference, not caring where your money goes, how it grows, or what it could become. This isn't ignorance, it's avoidance. Money reflects priorities. When you ignore it, you allow chance to decide your future. Caring doesn't mean obsession, it means intention. 5 minutes a day can change your trajectory over 5 years. Here's a moment to engage. While you're listening, ask yourself which habit hit closest to home. Be honest, then type the number in the comments. Not for me, for you. Saying it out loud, even digitally, makes it real. The truth is uncomfortable, but freeing. Most people don't need a miracle, they need alignment. Small habits, repeated consistently, compound quietly. That's not motivation talk, it's math. According to Vanguard, disciplined investors who maintain consistent contributions and avoid emotional decisions significantly outperform those who chase trends. Boring beats brilliant when it comes to money. If this message feels personal, it's because it is. Money touches safety, pride, freedom, and fear. Changing habits isn't about becoming rich overnight, it's about refusing to stay stuck. You don't need perfection, you need direction. If this made you think, share it with someone who needs to hear it but won't ask. If it challenged you, stay connected here. Conversations like this don't change lives alone, but they start movements, and movements begin with people who decide they're done repeating the same financial story year after year. Your future is watching how you handle today's paycheck.